everybody knows the 4-year cycle, right? Um, but when it comes to really pinpoint big swing entries, or where is the biggest risk and reward for a trade, I think the 4-year cycle is too, from an investment perspective, pretty good. When should I start scaling in? But when it really comes, when are the the moments where is the week where I should really buy a bunch of BTC or sell a bunch of BTC? The weekly cycle comes in pretty handy. And this is the weekly cycle only tracked for this BTC uptrend. And what you can see is that you have a major low every 30 or 32 weeks. And that so far consistently through that cycle. And it goes back also in the bear market here that were about 28 weeks, that were 30 weeks, and that were also 30 weeks. So you have a weekly cycle here. You see that? That is active and working. And that is the cycle I normally used to look at first. And then we have that cycle oscillators, which mainly one is lazy, which is the breath, and one is direct with his a smooth stochastic indicator. And the M on my chart, you'll see on the top here, the M and the 13s, but especially the M is basically when the already smoothed out stochastics, so already very late turning stochastics, when they cross, when they have a death cross here, the indicator prints an M. It only prints an M if we don't have also 9. So this is double. But yeah, that are the moments when I want to really, because it's such a significant event that I really want to see it on the bar. I don't want to miss this event, even though I have the indicator made small or don't look at it. I don't want to miss, hey, the weekly momentum here can shift, right? And from a risk reward perspective, when it's down at the bottom side, it's very, and it really matches with the weekly cycles here. You tend to have, like this low, great opportunities to really scale in and on the other side scale out, right? So from that perspective, we are pretty overextended. And as said, I see for the end of this overall 4-year cycle a scenario where we could have something like that, where you just stay above the zero line here for a while, but have a bigger dip like this. We printed an M, we washed out all the liquidity here. Kind of similar compression when you look at this here. Big range, a lot of liquidity down here, a lot of stops below this range top here. So maybe we wick down and explode up for one last, but that's the bullish case. The not so bullish case is, hey, I got to respect the signal, and the intermediate short term trend would hint on this can be a top for a weekly cycle, and this can start a much bigger decline, which will bring us to a bottom around mid November. So keep that in mind. That will fulfill a bigger cycle, or it's as said, like we did here, where we really had just a small little bottom, we get a second leg up and end the cycle, which would be the euphoric ending of this BTC overall bigger cycle. So okay, but we are talking in the short term, and I'm about to really get defensive here. I think we get a form of washout, maybe a spike up to 120 first, and then a washout. And that's also because of the daily cycle. So now we zoom in. We ignore the weekly. We know we have printed a weekly sell signal. And now we just look at the daily structure and the so far plan and what worked and what didn't work. So when looking at the full-fledged daily chart here, let's put out the trends. We reached the level I marked out on the last stream, which was just a liquidity pocket here, which should act as support. It's also from this VWAP here, the center line. So this is natural support. And it's also, when we put on the trends, the 6-hour trend, which double bottomed us on kind of the last 6-day cycle here. And then we had a bounce and then a lower low. And I think we get kind of the same structure here, where for now this should be acting as support, but I don't know if we can break free and really start it off before not washing out all and then go for one shot higher and then end the cycle. So I think, just based on how weak that reaction so far is, not very strong, that if you want that rally up, you gotta have to put you have to wash some people out, which would then maybe I have to rethink my 6-day cycle, and that's the kind of dynamic and difficulty with the 6-day cycles. Bob Lucas is one very famous cycle trader, and he also has problems with this 6-day cycle. Why? We had a perfect 5 move up in this cycle, so this is a perfect completed bullish cycle, and then we had an ABC correction down. Per Elliott wave, the correction was ending right here with the C. So in theory, this would be the much more important low, which then we would have to adjust the 60-day cycle, which would then move a low right in front of us, which would fit in a lower low and a washout. And from there, the 6-day cycle would be accurate again. And that is the difficulty. So for now, it seems like this is the path. Why I think that? My indicators on the daily, which are my short-term leading indicators, it's also the smooth stochastics in the breath. Breath is again printing a second sell signal. Last time it did here, we had a lower low. It's declining in general. And the smooth stochastics are also declining again. I think it's printing the exact same picture for now. So as long as we cannot hold above the 117.9, okay, I would say 118k level, as long as we cannot reclaim and hold above that level, I think this will be a short entry. Or let's say, and what I mentioned before, a spike into 120 would be actually perfect because it's the value high here, the value volume high, and would fill back that big rejection candle here. The X is a rejection. So just plain liquidity wise, a move up here would be a short, going down, taking out top liquidity, bottom liquidity, and then go for a move. That's how it stands. For now, locally, it does not look good. Everything looks terrible, but I got to respect that we are on the most important support level. From a pullback perspective, this should be the perfect entry level, just from fib levels. From a 6-hour trend perspective, which is the most dominant trend locally for BTC, this is the perfect level. And from a demand pocket perspective, this is the perfect level. So for now, and I entered along on BTC here, for now I think we get a shot higher. And then we have to see if we can hold above that or if we reject again and go for a lower low. And really that then from there, from this lower low, we would have to see if we can hold that and get a reaction to not put the weekly cycle full in play, which means a full decline for weeks. So what I want to see is a spike up maybe now in the short term, a washout, but I really want to have that level around 100k to hold. I'm not sure. I think we get below 108, which would stop everybody out that plays this range in the short term. and then get a reaction, which would play this double top feeling here for the cycle. And it's just the most painful scenario, because if you just go by indicators and you can pull up the RSI, the stochastics, everybody would be wrongly positioned, like they were here. And yeah, that's just how market works. Especially at the end of a bull cycle, this can get a leg higher. I still think we have a shot, but really after September, I think the time runs out and we get too near of a weekly cycle low. So it has to happen in the short term. I think volatility is high here. So yeah, that's my overall analysis. Do you have any questions on the weekly or daily cycle? Okay. Hi, uncle.
Yeah. Like the last time the M was printed, it took it 3 weeks until it swept.
Yeah.
So how would you go about to? Would you get the signal from the daily to that it's like beginning to make this like this is the first clue now that we have the M then. Then
Yeah.
now, how the fuck do we time it from here? Unless it just goes from today, then it will be fucking perfect timing. But like the like that M above the 27,000, there where you have the pointer at, no, down there. Yeah,
Yeah.
there are also 1, 2, 3, 4, 5, 7 weeks for it to bottom there.
Yeah. So from the M, if we really turn the momentum, I would just take it to the next time-wise weekly cycle bottom, which would be here, right? Which perfectly bottomed out, and then we got a turn. And also here, we topped out very late cycle. We found a higher low, and then we reclaimed on the daily charts, on the 6-hour charts here. We reclaimed this range. We swept it, we reclaimed it, and then we broke out into a fresh cycle. This is textbook bullish, but then we topped out early, right? And we got a momentum turn here together with a 9. That's why you don't see the M. Very early cycle. And when it comes to a cycle, it means, and that's how cycles generally work. Let's take this cycle here. You have the M very late. That means you have less time to correct to this cycle low. That's why you only got 3 weeks. Now you top out early in the cycle, in this cycle here. That means you have all the time till the next cycle low to correct. So it gets choppy and long-term correction. Same time for the bear market here. Once you get the M, very late cycle, you get a rough decline. Yeah, so from here, I would say if this is true and the momentum really turns, like here, mid-cycle, you trend down till end cycle. And that would put us, we have August, as said, till November. But as said, we have to be ready on the lower time frames that we get such a scenario for one shot higher, and this is just a fluke. And because it's a special moment, we are at the end of a bigger bull market. At the end, stuff can get crazier, and some sell indicators tend to not work, especially in the late craziness. So I'm just, in general, I would say I see this M, I see this turning, my bias gets completely bearish, and I plan to buy on the next low. But because we are at the very late cycle, I think you, from a market making perspective, you just want to have some liquidity to sell into. If you're a big whale and you're positioned, you want to drive prices up. So if this is distribution still, I think you get a shot down, then a shot up, then maybe a fail, and then break down, right? Usually this is how distributions are looking at, with big sell volume here at the tops. So still then, because we are late cycle, I think we get some shots to the upper side. Like here, we printed the M and we took out liquidity, but market got manipulated to the upside again, failed breakout, just distribution, and then you begin the decline. So I think it's not an ultimate signal to ride from here, go only down only. I think now we get chop, and this is just distribution until proven otherwise from an indicator perspective. And I think the best risk on reward is play the range. If you get a sweep and a reclaim, go long on the reclaim, then you have the best chances to take profits at range highs or on a fake breakout, or leave some running for a higher leg up for the end of the bull market, for example, and get some shorts filled here. This is the perfect long here if you get the liquidity sweep and then you long a reclaim. From a shorts perspective here, based on this M, if we get a sweep of upper liquidity next, so something like this, and this fails, you got everything what you can have on the chart. You have all the momentum turning, you have the breadth turning, you have everything turning, and a failed breakout. This is the perfect short. So you can long here and you can short here. From a risk rewards perspective, it's just don't do anything right here where we are. This is, for me, it's a complete no trade zone. The only thing I do is on the lower time frames maybe play it, as said, based on the daily stuff. Play liquidity, not swings, right? It's not a swing for me. It's a play. I'm in a short-term support zone, so I play to get into a liquidity pocket here and then sell that because maybe we don't get the upper sweep. So I can play a little long here, but I will cut it once we lose that level again. And then I will do probably nothing on that wick. But if we reclaim from here, then probably I would long going into a fresh 60-day cycle. So yeah, and that's the beauty of cycles. And obviously I'm already in profit with that trade on the 6 hour. The difficulty and the beauty of cycles is how you read it and how you interpret it. You have to know some things, and Bob, I really recommend you watch one video of Bob Lucas. He has a very old video. I will post it in the channel. It's about 1 hour long, where he perfectly explains how cycles work. For example, you top out early, you have long time to correct. You top out mid-cycle, you split it in half, and you top out late, you probably only get a little dip before starting another bullish cycle, which will probably, because the late topped out late, the first topped out late, the next will top out early. And then you have that whole theory where these tops and bottoms can happen. And then you combine it with an indicator which marks out key levels, and then you end up having nearly the bottoms and the tops marked. And for me, it's just be aware we are turning. Probably also in general, when looking at the trends, Computer Brain and I were favoring shorts since we are in this zone here, and so far this breakout really didn't get going. So I still think on the overall perspective, maybe it's a bit early for big swing shorts because you have just a bit volatility here. Means shots to the upper and the lower side before really breaking down, and you probably want to wait for bigger shorts on a little bit later in the confirmation. But in general, I think there's not too much win here on longs. We're pretty late. Yeah, that's my current thoughts on the overall market. And hey, Uncle Jay, I already explained Jojo that we probably will split the screens for now and have Computer Brain section on Tuesday, mine section on Monday, and then together on Thursday, so we can get more streams in. So that I cover the cycle stuff on Monday. He covers liquidity trading on Tuesday. Yeah. Yeah, that's where I stand. I see the M. I'm defensive. I'm short term in a trade, but will sell it hopefully for profit soon on that bounce. And then I look for a sweep. And then we see how we react if we get a higher leg up to end this cycle and extend this weekly cycle. Or if this was it. And if this was it, this low probably will get ugly. So yeah, just be aware that, as said, just looking at the chart like that, you want to buy here, you don't want to buy here, or you want to swing long here, you don't want to swing long here. It's just the and this chart determines just my position sizing, not only the actions I do, it's also determining the position sizing. On this momentum signal back up, and once everybody turned, I took on bigger risks than I took here at the range highs, just because we are extended further. You want to reduce your risk with the trend. When the trend goes higher, you want to reduce your risk. You will never want to get more bullish or add on more risk late in the trend. So your risk curve is really, you see the M, your risk is up, and then you reduce the risk with the trend and take profits on the way. The risk is in the beginning, when you get your buy signals, when you get out of the high opportunity pocket here, which is right here. That's where you take on the risk, and then on the way up you reduce the risk, and now we are here where you don't want to risk much at all and only take small scalps, because I think we are in the distributive range, so you can play the range locally. From a shorts perspective, this is again high opportunity area. Means, as said, if you get a sweep up which fails, right after the momentum has turned, you can play the risk curve to the other side, and you take on the biggest risk here with a short and reduce the risk on the way down. Means you take profit, get back your initials. And that's how I would view the cycles. It just helps you when to risk a lot, when to risk maybe less, when is a time where you only want to look at short-term possibilities because you're in the middle of nowhere. When is the next window to be really active? It also could be that you are not a good short trader and you say, okay, looks like shit. I will go on vacation for 2 months because I don't expect the market to do a lot here. And for me, for longs, next big window will be the year. Which does not mean the bull market extends. This cycle low here could be a cycle low like we had here, which was just a bounce up before a bear market extended, right? But you could long it. You could long it. I have to clean up my chart after. Yeah. I hope I covered all questions. Because it's really discretionary. It's not hardly defined. You have to wrap your mind around cycles and how they work. But I will share the Bob Lucas video. I think he has a beautiful way of explaining it. And yeah, I mean, everything moves in curves, right? And in waves. And markets too. And cycles, the beauty of cycles is just you can ride the waves. So the idea is to not exactly, but to enter trades around that zones here, these peak extremes, and do nothing between or reduce risks. And you can do that with determining stages, like stage 1, accumulation and read on volume, and then combine your volume read with the cycle timing and say, hey, this is clear accumulation range down here. I have a good volume read, and then you see here, now the volume read is different. This is distribution, and now we enter. It doesn't matter. You have to find the indicators that work for you and give you the best read together with time-wise cycles. Because as said, everything that goes up needs to go down some days, and that's how these wave structures or general markets are formed, right? Two steps above, 2 steps forward, 1 step back. 2 steps forward, 1 step back. And that's just basically a big wave or waves that form. And the goal is to not get forced to do anything when the market is highly volatile and puts in that god candles. The goal is to be positioned when they happen, which isn't easy. That's why all my cycle plays are extreme low leverage. So when I play on the leverage account, I do 1 or 1.2x leverage. Not a lot. I just position. It's just a position, in or out. That's how I keep my head cool. Yeah. And I think that's it. We covered the cycles for today. Any other
Yeah,
questions?
very interesting presentation. I like the high time frame stuff interests me, but I suck at it, to be honest. So it's nice to see perspective on the weekly and daily charts actually,
Do you have a
because I
trading
want
view
to learn.
account?
Huh?
Do you have a trading view account?
If I have what, the trading view? Yeah, of
Yeah.
course. Yeah, I
Send
have the
me
yearly
send me your
view.
username. I will add you to my indicators. Maybe they help you read.
The high for the high time frame. Yeah,
Yeah,
sure. Yeah, yeah,
you should look
of
into it.
course. Yes.
Um,
Yeah, I need to do because I want to find more high probability trades to like the higher time frames, not just the short term. So yeah, I will
yeah,
look at it.
it really depends on what life phase you're. When you have a lot of time, the day trading can be perfect to make quick profits and be aggressive in markets, especially in rising bull markets. But I think overall, with the standard time management, like you have a job, you have kids and stuff, the higher time frame stuff, especially weekly cycles, are a perfect way to just imagine scaling in, do for 20 weeks nothing, and start scaling out again. And repeat that over 5 years and just quadruple your money. Um, would have worked perfectly
It
here,
makes sense.
and I do it with BTC. So I have a BTC stash where I just scale in and out. Like I try to ebb and flow with the market. Sometimes it works better, sometimes it doesn't, but I can outperform spot holding BTC. And I think that is the edge. Like just because when you have a risk curve, the less risky, the most less risk thing is just buy spot BTC. But if you have a method based on weekly cycles where you can outperform by 2x spot holding BTC with not much stress and effort, that's extremely powerful in the long run because you can lose the most money in day trading. Yeah. So,
Yeah. To be honest, if I began my crypto career with just buy and hold, I have been would have been in a much better position than I am right now. But it is what it is.
I
Yeah.
think that's the standard story for us all. If I would have
Yeah.
still my BTC I had 2016, I would be in another position. Maybe not here. I don't know.
Yeah, I know. I was delusional thinking I would outperform the BTC performance from before I even know anything. So,
Yeah,
yeah,
we were all at the same place. But now we have to deal with the higher prices and have to trade our BTC back.
yeah,
So we do it.
Hey guys, one thing I'm noticing about, trying to do these little scalps on the 5 and 15 minute time frame is that it really does. It takes a lot of mental effort to possibly get a very low return sometimes,
Oh yeah.
or for the risk. So I guess I see what Jojo Knuckles is talking about, wanting to kind of scout up some higher time frame entries that are less stressful. Because with those low time frames, like you have to have a good win rate because if not, you'll blow your account out. You know what I mean? Because you're
Yeah,
constantly trading.
yeah. So my success, my most trading success, were weekly and daily trades. And then the daily trades are entered based on 6 hour trend, for example, right? But it's based on a weekly and daily chart. My most successful trades, and where I lost the most money and fumbled is on the day trading, on the short time frame, because the more you zoom in, the more often you get stopped out. Also, market manipulation, liquidity hunting, always, nearly always, only works and happens on the low time frame. Because let's have BTC. What has it for? How many hundred millions of dollars is it traded a day? You have to have a lot of money to make a weekly big move just for a liquidity hunt, right? But on the 5 minute,
Yeah, that
on the
makes
five
sense.
minute, it happens every 15 minute happens a big spike up, big spike down, liquidations everywhere. It's a battlefield.
You see, I've had the few that I've missed. You know, I have a stop in place, but sometimes I would just like look at the lower time frames and be like, oh, this looks like a good entry, and then as soon as I'm in it, then I zoom out and I'm like, oh wow, this is like the worst possible place to go long or
Yeah,
short or whatever. You know what I mean?
yeah. That's why you should start on a zoomed out chart. So if you plan to enter on an hourly chart, please check the daily first, because if you plan to sleep, the daily has to look good. You know? Because
Oh
you
yeah, for
cannot
sure.
enter on the 1 hour and expect to sleep if you didn't check if the daily chart also looks good. Because if the daily looks like shit, in 3 hours the whole game can change. For the one
Oh,
hour
for
being a
sure.
great bullish setup. Right? So what I do is, we are in a weekly pocket, of high opportunity for longs. Cycle fits, everything fits, and then I start to zoom in, right? And then, like here, then I start to zoom in, and then I start to draw. Okay, what would be my triggers, right? What
Okay,
kind
I see. Yeah.
of structures do I have here? And then I'm on the daily chart, and now the weekly turns bullish, and we had a 60-day low here when I go to the 60-day chart. Okay, so I go back to that place, and then, we are in a 60-day low zone, and we get within the red zone, we get a green candle. That is my buy signal, and then together with that, we got a breakout max long here. Basically, me max longing here. And then, this can be a early cycle top. This is rolling over, like daily cycle oscillator rolls over. We get a M. This looks distributive. High volume at range highs. Start scaling out. And that was fucked up. That was an M and an immediate nuke. Bad day for me. Lost some money. But yeah, you get the point, right? And
Yeah. Oh yeah.
if I'm here, then the next thing is I zoom in to the 1 hour or to the 4 hour, whatever the local trend was, and then you see that trend line here, and then you see the M, and then you see it here reclaimed, back tested, and right after shot up. So you probably got the daily signal in general to enter, the time-wise signal, the weekly signal, and then the 1 hour signal, and you basically, that's max opportunity right here. Once we move out, you shouldn't. The problem is, if you don't enter here, you're forced to entering here, and that's where the fuck up starts, because you can't.
Oh yeah.
Breakouts usually don't happen
Missing
like that.
walls.
It moves up and then down, and then fucks you up and then goes. So you have to be a little bit early. And that's how timing and these indicators help. They add confluence.
I see. So you're trying to find where all of these different indicators align across time frames.
Yeah, yeah. I check the weekly. The weekly determines my bias. Weekly is in the bottoming high opportunity window. Okay, let's zoom into the daily. If we are also in a 6-day cycle low phase with buy indicators, it's probably ultra high opportunity area, right? And if I
Yeah.
don't want to have a high stop loss percentage wise, then I zoom into the 1 hour. But I also could say, I don't care, my trade is something like that, right? And my stop loss
Yeah.
is below here because I expect that would have been the low. But if I zoom in the 1 hour, now I can optimize a trade, right? That is an optimized trade. But it really depends on your style, man. If you just
That's like minimal drawdown for a swing trade there, right
yeah,
there. It's just two impulsive candles up and yeah, that would be crazy.
it is perfect. This was
Yeah.
beautiful. I remember me saying, oh my god, I'm so happy I entered around that reclaim as we shot up, and I scaled once we broke out, and I said, you know what? Fourth time is often the charm. 1, 2, 3, 4, and you get the real break. And that's how these trend lines work. It's such a fuck up. You get 3 fake outs and then the real. But guys, I have to end the stream. I have to support my mother. She has some PC problems today, so I have to go. It was a pleasure. Tomorrow is the next stream with Computer Brain, and then again on Thursday.